this morning from Roskill. I'm joined by Ying. Ying, good morning.
Thanks, Andrew.
Talking cobalt, just give us a quick refresh, firstly, as to where it comes from and its main uses.
Yes, definitely. So one of the important characteristics of cobalt supply chain is a high concentration of production in two countries. One is the Democratic Republic of Congo in the mining side, and the other is China in the refining side. So that means when we are talking about the supply of cobalt, we are very much talking about a China DRC story here. And in the DRC, cobalt is mainly mined as a byproduct of copper, and this reveals the byproduct nature of cobalt production. Cobalt is also mined as a byproduct of nickel in many countries, such as Australia, Canada, Cuba, Madagascar, etc. And once you get those mined cobalt units, and cobalt can then be refined into different types of products, both in the form of metals and chemicals. And from the end user perspective, so the batteries represents the largest first use of cobalt, and this mainly consumes cobalt in different form of chemicals, such as cobalt sulfate and cobalt tetroxide. And cobalt can also be used in other applications, such as nickel-based alloys, tool materials, and magnets. That's mainly in the form of metal.
Well, we've seen some weakness this year in the cobalt price. What's been the reason behind that?
So what we saw about price is that the price started to fall from its 10-year peak at $44 per pound in April last year. And until July this year, the price actually shrunk to about at a 3-year low at $13 per pound. And so the price rally in last year and in 2017 we saw was largely underpinned by the increased demand for cobalt feedstock. And this then incentivized a production, a huge supply response for the DRC, putting the market into oversupply and subsequently a price decline as we saw this year. And more recently, we saw some recovery in the cobalt price. And this was mainly because of a big supply side change, which was the Glencore's announcement to mothball the largest cobalt mine, which is Mudanda. And they already did 1 month earlier than scheduled. And this further evidenced by the improved restocking appetite from traders and investors. And we also see some drawdown on the stock for metals in different exchanges like LME and Wuxi in China.
Tell me a bit more about that then, the closure of the Mutanda mine. What's the impact going to be slightly more longer term on the cobalt market?
Yes, definitely. So as the largest cobalt mine in the world, Mudanda has an estimated capacity of 28 kilotons per year of cobalt in hydroxide. And this is an equivalence of nearly 1/5 of the global mined cobalt supply. So we believe by moving this portion of supply from the market, the cobalt market is likely to find its balance. And however, in the medium term, we also see some new supply could come in from different sources, like the ramp-ups and restart of the existing operations in the DRC, such as ERG's RTR, Shemaf's Mutoshi, and STL's Big Hill, and also from commissioning of some new projects, likes of Desiva, etc. And also, in the long term, we expect recycling to be another additional feedstock for cobalt.
Well, in what way can cobalt be recycled?
Sure. So based on our study, cobalt can be recycled in various sources, such as battery waste, tungsten carbide scrap, alloy scraps, and spent catalysts. And so geographically, Asia dominates the cobalt recycling, with the majority being recycled from battery waste, which is mainly benefiting from its booming battery manufacturing industry. However, in Europe and in Americas, cobalt is mainly recycled from alloy scraps and spent catalysts. That's benefiting from its thriving energy and aerospace industries. So we do expect in the longer term, when the EV penetration rates increases and more such vehicles approach end of life cycles to be readily to be recycled, recycling can be another additional feedstock.
Well, just on EVs, we've seen recently a drop in sales, haven't we? So what's that going to mean for the cobalt demand?
Yeah, sure. So what we have seen, the slowdown in EV sale, especially in the second half of the year, were largely as a result of the Chinese EV subsidy cut and also a relatively grim global economic outlook. And this kind of dampened the EV sales. And also when you're considering the high raw material price, such as nickel, so substitutions like non-cobalt and non-nickel cathode chemistries can be possible in the short term. However, we still expect the NCM, nickel cobalt manganese cathode, to be the mainstream players in the market. That's because of its competitiveness in its overall performance compared with its peers. And also in the longer term, we still think the long-term outlook remains strong from the EV sector. And this is also evidenced by some long-term contracts, supply deals between cobalt miners and the downstream players, as we see recently. And apart from the battery sector, for other sectors such as super alloys and consumer electronics, we also put a very healthy demand growth for these sectors. So the long-term outlook for cobalt, we believe, remain strong despite the weakness we have seen recently in the market.
Very good. Ying, nice to see you. Thank you.
Nice to see you. Thank you.